Hello traders, welcome back to the Forex gig where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about one of the most reliable trend following strategies in Forex markets, the ADX Crossover Strategy. This approach combines the strength of the market momentum with directional movement to give you a clear signal for entering and exiting trades. If you are looking for a strategy that helps you capture strong trends while maximizing or minimizing false signals, then this is for you. Stick around until the end of this video as we will break down how to set up this strategy on your chart and the exact rule for buying and selling to refine your trades. So let's get started. First of all, we start by understanding the ADX component, which is the average directional index. It's a technical indicator that measure the strength of the trend, whether the market is moving up or down. It does not indicate the direction of the trend, but it helps you to understand how strong the trend is. The ADX is typically used with two additional lines, the plus D1, which is the positive directional index. No, the sorry, we the ADX is typically used with two directional lines. The first line is the plus DI, which is the positive directional indicator, and the second line is the minus DI, which is the negative directional indicator. The ADX line itself ranges from 0 to 100. The higher the value, the stronger the trend. And the ADX reading above 25 usually signals a strong trend, while a reading below 25 suggests a weak or a ranging market. As you can see, this is our ADX indicator and this is the line. If you see a line that ranges below 25, it signals a weak or ranging market. When it's above 25, it is a strong trend. Now let's dive into the positive directional indicator and the negative directional line indicator. Now the plus DI and the minus DI lines help you determine the direction of the trend. When the plus D line crosses above the minus D line, it suggests buyers are in control, signaling a potential buying opportunity. Conversely, when the minus D line crosses above the plus D line, it indicates that sellers are dominant, signaling potential selling opportunity. Now let's see an example on the chart. From this indicator, let me show you the pattern I'm using to the style I'm using for this indicator. My plus DI is the green line on the ADX indicator. My plus DI is the green line, while my minus DI is the red line, and my ADX line is the blue line. So let's not get confused. Let's not forget, when our positive D line crosses above the negative D line, it signals buyers are in control and we have to look for buying opportunities. And when the minus D line crosses above the positive D line, it indicates sellers are dominant. My positive D line is the green line, while my negative D line is the red line. The combination of these three lines, the ADX line, the positive D1 DI line and the negative DI line, gives you a complete picture of both trend strength and direction. The key is to wait for crossover between the positive DI and the negative DI while ensuring that the ADX value confirms the strong trend. Now let's see an example of this. When we are in a bearish market, the positive D line, when the positive D line crosses above the negative D line, it shows that we are in a bullish market. At this area where price was reversing from, creating a series of higher highs and higher lows. If we notice here, we can see the positive line crossed over the negative DI line, and it shows that we are looking for buying opportunities at this particular area. That's what it means. That's an example for a bullish scenario. Let's look for a bearish scenario. In a bearish scenario, the negative D line crosses above the positive D line. I repeat, for a bearish scenario, when the negative D line crosses above the positive D line. At this area, we can see the negative D line crossed above and is trending above the positive D line. At this area, I see the negative D line, this red line is above the positive D line, shows that we are expecting decrease in price. And what happened on the chart was price reduced or traded to the downside at this particular area. Now let's look at how we can implement this to our strategy. The ADX crossover strategy is a trend following approach that uses the ADX, the positive DI and the negative DI lines to identify strong market trends and provide clear buy and sell signals. Excuse me. This strategy is particularly effective when the market is trending, and it helps you to avoid fake signals in range conditions. Now we set up our indicator. To implement this strategy, you need to set up your ADX indicator on your chart with the 14 period settings, which is the most commonly used way to set up the ADX. You set it up with the 14 period settings. So we set it up with the 14 period settings. As you can see, the length is at the 14 period, so it's already set up. My chart is already set up. When you set it up, you can also include moving average for additional trend confirmation, but this is optional. So for this example, I will not be using the moving average. The ADX 14 period measures the trend strength. The positive DI and the negative DI lines identify buying and selling opportunities based on the crossover. The key ADX level, which is the reading above 25, indicates a strong trend, while the reading below 25 suggests a weak or ranging market. Now, how do we enter? We enter the trade for a buy signal. A buy signal occurs when the positive DI line crosses above the negative DI line. At this area, we can see the positive DI line, the green line, crossed above the negative green line D line, and it shows that we need to look for buying opportunities. The ADX value must also remain above 25 to show that this trend is strong, and as we can see, it is above 25. This line here is above 25, is at 29, so it shows that yes, this our uptrend is strong. Now let's look for selling signal. For this selling signal, we have to confirm when the negative D line crosses above the positive D line. As you can see in this area, the negative D line crosses above the positive D line. This red line crosses above the green line and is trading above it. It's trending above it. It signals time for lower prices or a downtrend. sellers are taking control. Again, to ensure that it's a strong trend, we have to confirm the ADX value to be above 25 to confirm the strength of the downtrend, and you can see it is in 34 right now. Look at this area of the ADX. You can see this part of the chart is in 34, showing that it is above 25, and it confirms the strength of the downtrend, and we can enter our short position. Now, how do we exit our trade? We exit our trade for a long position. First of all, let's see how we enter. We enter the trade. By the time we see a crossover, we can enter the trade at that level. Where we see the crossover, we enter the trade at that level. Now, to exit the trade, we exit for a long position. For a long position after the crossover, we enter after the crossover at this area. When the positive crossed above the negative, we enter at this area. How do we exit our trade? For long position, when the negative D line crosses back above the positive D line, this indicates sellers are gaining control. So where we would exit our trade is when the negative D line cross below. Where we exit our trade is when the negative D line crosses above the positive D line. So when the red line crosses above the positive or the green line, at this area is where we would want to exit our trade, because it shows that sellers are coming into the market, and truly sellers gained strength and came into the market. So if we had traded this setup, we would have gone out of the market with at least 1:2. Why for a short position? Let's see how we can exit a trade for a short position. We exit our trade when the positive D line crosses above the negative D line. So when we enter our trade, once the positive D line crosses above the negative D line, when this green line crosses above the red line, it's time for us to exit our trade at this area. And we can see that if we took this trade, we would have banked at least 1:1.8 risk to reward. You can also consider exiting your trade if the ADX value drops below 25. This is another exit strategy. When you feel that the strength from the ADX line is no longer strong, once it's below 25, you know that it might be going into a ranging or a slow moving market, so you can exit your trade at that area. How do we place our stop loss? For risk management, always use a stop loss to protect your capital. Now, for long positions, we set our stop loss just below the recent swing high, or swing low rather. We just set it below the swing low. While for short positions, we set our stop loss just above the recent swing high. To keep it at a safe distance. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so you may never miss out on more trading tips and strategy. Thank you for watching, and I will see you in the next video.